Hey guys, this is Simon with Trade and Perform Coaching, and tonight's trade review is actually a little bit about how do you bring yourself back online when you've been a little frustrated, and how do you get your emotions in line with what's going on. In other words, um, I have missed a lot of really good trades over the last couple of days, and that missing, quote unquote, of trades has led me to feel like I'm actually in losing trades, or I've been losing a large amount of money. But when I check with my partners, that's not accurate. I went through my spreadsheets, I went through obviously the statements, and the trading is actually pretty good. What's missing is I'm not capturing any of the large moves. So I wanted to kind of go back and find the genesis of where this feeling started to occur so I can identify it, get familiar with it. And so for you traders that are just kind of ice cold out there, this won't make any sense, right? You just go, you either get your trade or you didn't. For guys that kind of rely on their sixth sense a little bit to make good trading decisions, this should make a lot of sense to you. So I wanted to retrace how it is that I got to the point where I was struggling a little bit. And so, give me just a second here. I'm going to highlight it really quickly. So a couple of days ago, when I traced it back into my notes, I had identified that this close here at 1977.75, I tweeted it out on StockTwits and on Twitter, put it in my trade notes. Close below 1977.75, closes us into the range, and pushes us effectively, or opens us to the opportunity of trading to the bottom of the range. First 1920, and then by extension 1910 to 1900, and then finally, if we really extend down, 1880, right? So we close in. The move is stolen overnight here. We opened the next day at 1850. We retraced, but we didn't retrace quite to fill the gap or to 1870. And so it's hard to feel when you call a short at 1977.75, but because the trap occurs at the very end of the day, there's no way for me to get a trade on. I don't carry my trades overnight. The move occurred overnight. So in my head, that was the first point of, hey, that was 27 points I should have had on my P&L docket. It never appeared. Okay. Next, when you get a move where overall over a couple of days you travel from 1977 all the way down to overnight, down to this 1910, you would expect the move to look somewhat like this, where it comes down, and you'd expect the intraday to kind of look like this, right? This is kind of what I would expect as we're moving to the downside. But that's not what we've gotten. What we've ended up getting is a series of balanced days. This is a balanced day. This day is balanced. Yesterday was balanced, and today was balanced. So in my mind, I'm going, hey, we should be getting a directional move, but what the market's actually setting up during the regular trading hours are balanced sessions. And so that is something that mentally I'm going, okay, I'm looking for a large move to the downside to complete the auction down to 1910, and instead what we end up with is slow, choppy, balanced days. That's been a source of irritation as well. That's not a bad thing now that I can identify it. Now I at least know why I am having a difficult time, which is I've correctly identified the larger picture move, but intraday that picture has not lined up with the reality of the trading environment, which is balance. And it's been multiple days of balance. And even when we gap down, we ended up not having a trend day down. We ended up with a balanced day after the gap down. Okay. The next piece, even on a day like yesterday where I correctly identified, first of all, that we could have a roll to the downside, because of the way that the roll occurred and we didn't get a stretch, I was unable to get a short off in this area. Now, I didn't get run over, right? And the problem here is not while I'm taking enormous losses. The problem here is I'm not getting a handle on the larger move. And that's where the frustration is getting generated. And my larger picture thought had interfered with the smaller picture intraday action. Yesterday, I had identified this area right here, this 50-60 retrace that we had off the lows, as a potential good long location. However, I found it mentally very difficult to take because I expected the 1912 to still get tested. And obviously, up until this point right in here, the downtrend that we established from early in the day was still in effect, right? That did not get broken till very late in the afternoon where we got short squeezed. So I've done a couple of things actually right in this area. First of all, I had the 1912 area targeted as my long location. That was the correct location. It got hit overnight. Number two, we've avoided being short at the end of the day. That has paid enormous benefits, right? If you look almost every single day, we have not gotten run over. And if you look, this 1, 2, 3, I'm going to count this as 4 days where there was no push to the downside, which is weird, right? When you think about it, you're like, man, the market's going down. It's kind of bearish. We've trapped underneath that 1977. Where's the big where's the big move to the downside? And the answer is it's just not occurring at the end of the day. So many people see the short side move that we're all packing in right here midday for that extension to the downside, and everyone's just getting squeezed up. So in my journal, I need to go back and go, hey, you've actually done a good job at identifying that the short side trade is not worth taking at the end of the day, that the short side is crowded, right? And you haven't gotten run over in any of those areas. Where I failed a little bit is I have not taken a trap back in to the range that I would normally identify as a good trade. I failed to take those trades. I didn't take it here. I didn't take it here. And then also the price action's really throwing me, right? If you look at the price action last couple of days, go back a week ago. Look at this price action to the upside, right? Much easier to read. See, these are robust moves. And even prior to that, look how crisp and robust the moves are, and they're two-sided. See that? See how much different this price action is than the price action. See how we're not spending a large amount of time in the middle of the day. Oh, the only day that we did consolidate in the middle of the day was truly a balanced day, right? We're not getting day after day where there's consolidation in the middle of the day. That is certainly adding to my consternation. Also, the stretches, if you'll notice when the breaks are occurring, most of these breaks, if you see, most of these breaks occur early in the day to the downside, and then we get constructive to the upside, or we continue to roll over. This is the day of Apple's big announcement about their new stylus. But you'll see that there's very little extended periods of consolidation in the middle of the day. Compare that to what we've gotten over the last week. Huge consolidation in the middle of the day, right? Without a lot of movement, right? So the PA has changed a little bit. I missed the trap. I didn't miss the trap. There was no trap to be had on the RTH at 1977 3/4. It was the correct call. The move down to 1912.50 occurred. 1912 occurred. That would have been a great trade. It got stolen overnight, and then finally, again today, middle of the day, huge, slow, grindy consolidation. Also, the breaks to the downside have been delayed this week, right? If you notice, they're coming after the first hour, whereas in the prior week, the moves have actually been pretty crisp. In the first hour, we've had very little consolidation, where the breaks up and the breaks down have come really pretty early in the day. We either start moving up or we start moving down pretty early, and then we get these areas where we do get decent reversals, right? That did not occur today. And even though I identified, and then the last piece is the directional move today. I identified this morning as I said, if we get back below 1934 1/4, that would be a trap back in. And when we got this move here, I said, if I can get a 50-60 retrace or backside test back into 1934 1/4, I would like to take that short. Here's where I think I made probably my worst decision of the day. We get that test right to 1934 1/4. I got so agitated by this long extended series of nothingness in here that I just did not get reset in the afternoon. Either I'm not relaxed enough or I've gotten a little too tense in my trading to pick off this 1934. This 1934 3/4 was perfect. I identified it the trap. I didn't take it on the backside, trade back in. And then when we did trap back into the range, which is on this bar right here, and this is my best setup that I have, and I failed to take this trade and the reason why I failed to take this trade is because every day prior, we've had these huge push-ups at the end of the day, and they have caused me a huge push-up here and a huge push-up here. And so we didn't get that big push-up at the end of the day today, but I had anticipated it. And because I anticipated it, I did not take this trap in at the end of the day, and I ended up costing myself what would have otherwise been a very good trade. So kind of going through this process, and I don't think I've been as brief as I wanted to be, going through this process has really, really helped straighten out where I want to make adjustments. First of all, I am focused too much on the larger picture, meaning where we're going, and I am trying too hard to capture larger trades right now, and I probably need to back off of that a little bit, meaning when I'm looking at it at 1934, I probably need to not worry about the 1912 target. Secondly, I need to acknowledge a lot of the move is getting stolen overnight, and there's nothing wrong with that. Other than I need to acknowledge the move is getting stolen overnight, and that is not going to necessarily translate. That's translating to is balanced days during the RTH. And if you look on the 24-hour right now, you will see, put that back in, we have that situation again. We came up to this afternoon, we came right up to, where were we? Here we go. Let's get to the end of this. Okay, so this is like this afternoon. You see we came up to test that 1934 and a quarter exactly, right? This is a 24-hour chart that we switched to. 1934 and a quarter. We came up to 1934 and a quarter again in early Asia. Again, this did get squeezed up at the end of the day, but there was still a nice trade to the downside all the way down to 1926 from 1934 and a quarter. And then as you can see, we've tested all the way down to 1918. Why is that important? Today, when I was looking to get long, here's today's chart, right? And if you look, I had highlighted this 1950 to 1917.50. This is what I was looking to get long in this afternoon. That would have been a stretch from 1936 down to 1926. That would have been almost a 20-point stretch into Tuesday's low. This is where I was looking, and I have to assume, based on the reaction that we've gotten off the 24-hour, that that would have resulted in a very nice upside trade. So, in conclusion, right, where I'm placing the zones and my read on the market have actually been pretty good. I need to probably go look at the tick and realize that until we break out of this balanced rotation, that the reason why things seem off to me is because I am looking for a directional move, and the directional moves are coming overnight, and during the RTH, we are getting balance, and I need to trust that balance a little bit more closely. And if I'll make that small shift starting tomorrow, that we are more likely to have balance up and down than looking at the larger move, meaning what's 20 points away up and down or 30 points away, and instead focus and trust that we are in balance. I will probably be able to do better going into tomorrow. So at any rate, I haven't done the trade review for a couple of days, guys. I know this was a little rusty, but I kind of had to go through and knock the cobwebs out and figure out why I feel a disconnect between the trades I feel I should be getting and the price action we should be getting and what we are actually getting in reality. And so now I have a pretty good picture of that, right? I know in reality that the market is actually is meeting the larger targets, meaning from top to bottom we are getting those larger moves, but intra-day we've been a little bit slower. What am I going to look for that will change also? Because now I don't want to come in tomorrow and go, oh, we're in balance, and then get caught in a trend day down where I get hit on both ends. So first of all, I'm going to stick to my rules, which is no trading in the first half hour, right? I'm going to focus on the 25 to 30 point rotations. that will keep me safe. If I don't get those, right, and I'm dealing with smaller than rotations, I'm probably going to cut my trade size a little bit, because I know that 25 to 30 has been key before getting big swings in the other direction, right? Next, I'm going to see if the price action itself has changed, meaning I'm going to look for non-consolidation in that 10 to 1 p.m. time slot. If I'm seeing this get big whips up and down, meaning big moves, 5-10 point rotations in that time slot, I'll go, okay, I know that the price action in the time, I'll know that the price action has changed that time slot, and therefore I can probably expect a different type of trade. And then the last thing is, because I know we've been getting pushes to the upside at the end of the day, I'm going to look for late stretches down and traps back in. For those in my room, guys will know what I'm talking about. Second A grade traps to the upside, traps at Globex low, traps at prior day low, and then structured traps that are set off by the swing trade indicator. So I hope this made sense, guys. I know I feel better now that I kind of have an understanding of why it is that I've been a little bit off over the last week, and hopefully that'll lead to me getting better trades during the day. What I don't want to do, and I would encourage you to do too, is I want to back that clock up from the pressure cooker that I've put on myself to get the trades and come back in much more relaxed tomorrow in the morning, and that is exactly what I intend to do. I'm 16 minutes into this, longer than I wanted to be. That's the trade review for tonight. Guys, I know in the room, it'll make sense. For those of you who are not in the room, this one was a little bit funny, but sometimes you just have to take a second and step back and figure out why it is that you're not capturing your larger trades. This one in particular hurt today. This backside test, not getting the backside test at 1934.25, obviously would have resulted in a very nice trade to the downside, and just barely missing my targets has been frustrating, but it's key not to let that frustration turn into taking bad trades. So, my name is Simon. I'm a Trade and Perform Coaching. I hope this helps, guys. I will see you all bright and early in the morning, and we'll talk to you then.